Huh? And now? Hello? Uh, that's really weird. Okay. All right. Let's try it now, guys. All right. So last night's session in the States wasn't a big sell-off, but I think what was important was the move we saw again in U.S. Treasuries. This is just coming literally out of the middle of nowhere. The move in Treasuries. We obviously saw some weak data at the end of last week that got Treasury yields pulling back. The yields are once again running as bonds selling off last night and aggressively so. That's to me the big story of the day. We've got OPEC releasing a report indicating crude prices will not climb above $100 per barrel in the next decade. And I think that is actually really telling. All right, moving on to the Asian session. We had a mixed day. We basically had Australia, which traded well. Everything else was more or less right around flatline. No real leadership to speak of there. I don't want to spend too much time on something that's a bit of a non-event, so we're going to move on. This is chart of interest on the day today is the S&P 500 dividend growth year-on-year change, which is up almost 15%. I mean, that's quite spectacular when you think about it. And that's what we've been seeing. We've been seeing these companies coming out and doing buybacks and upping divvies, even though maybe there hasn't been real good profit growth. And that's really been booming markets of late. No corporate action to speak of today. Let's get into the market data. We've got industrial production out of the UK today, as well as the manufacturing production. We've got manufacturing production here locally at 1. And then we've got the U.S. monthly budget statement only later today in the States. Okay, let's get into the maps. What I wanted to talk about today is, the first thing we'll look at again, once again, we're showing another failure here on the S&P. Let's get into a one-year chart here. But you can see yesterday we came up, more or less tested it again within a point of testing, new highs on the S&P. It's just been an absolute monster line in the sand. We keep seeing the same thing happening over and over. I mean, sorry, let me draw it from the bottom here. Some people are saying that we broke down the other day. We got very close. It looked like we did break down. We managed to get back in that range, but it's starting to feel a little bit different here. I mean, every time it gets up there, there's just nothing to it. So I think we're going to need to see a drop and a close below 2080 at least to get the ball rolling in 2040 to really get any momentum to the downside. Those are the big levels to watch. The most important chart that we can show today is this one. This is the 10-year Treasury yield. So bonds got smoked yesterday and continuing in that way this morning. We talked about it the other day. You see this red candle here, okay? This red candle where that intraday, that was on, I think, Thursday. We traded up to 230 intraday, and we really reversed hard. We kind of only came down around here next to the 200-day moving average, and then all of a sudden we started creeping back up. and we've crept back up. We haven't had any new data. There's been nothing else new really released, and these are yields going higher. The market's starting to scream at us that interest rates are going to go higher sooner rather than later, and this is going to be the game changer here. On the back of that, and I think what are two of the most important charts that we can look at. Sorry about that. This is the Rand pound. We're going to back out. We're going to look at a 5-year chart here just so you can get the extremity of the consolidation, as well as I think the levels was here at 1850, which we've already broken out of. It doesn't matter how you draw it, because either way we've broken out and very clearly broken out. So either way, we've got a massive breakout happening here in the Rand, or in the pound versus the Rand. I think there's only one way to gauge this, and this is a move coming to 20 Rand in the near term. This consolidation's been happening going all the way back to the end of 2013, and so we've really spent a lot of time in there. We've got a definitive breakout happening here. That breakout is really starting to carry over now into the U.S. dollar Rand as well, and you can see the same chart. So you can see we actually have broken out as of this morning. Last night you could see this kind of coming with the yields spiking in the States, but this chart also, beautiful little descending triangle here, or big flag, whatever you want to call this. We've definitely broken out in my mind, especially on a closing basis, provided we close up here. I think that there's big upside here in the dollar Rand. We'll probably, in my mind, we'll take out new lows on the Rand, probably get up to 1270, 1280 in the near term. So a lot of meat left on that bone. And guys, when you think about this, when you think of the U.S. coming out of I don't even know how long it's been, 5, 6, 7 years of ridiculously easy monetary policy, and incredibly low, unsustainably low interest rates. The emerging markets are going to be the most adversely affected as those yields start to rise, and this is definitely I think the easiest place to aim. So one of the things that's important to note is if this is going to happen, what's going to be affected after that? What shares are going to get hit on the back of the weaker Rand? What shares are going to run on the back of the weaker Rand? And so, you got to kind of plug that in accordingly. We'll kind of throw you some more feedback over that in the next couple of days. Obviously, the retailers and interest rate sensitive, as an interest rate sensitive sector, they will be most adversely affected, most likely. But you've got a couple things happening here. So Mr. Price right now trading just north of 245. You can see here really consolidating at about 245. 3 days in a row we've tested below that level, and we've managed to hold. I think if we start to see a turn up, especially if we see a nice green candle here, there could be higher levels. But then again, it hasn't seen much bounce, even though we've been hovering here for 3 days, and we've had a couple nice days of rally. It hasn't been able to get off its ass. So, with this Rand blowing out like that, this could actually be a negative here for Mr. Price. All right, we'll look at Discovery. And Discovery bouncing hard off of trend support in yesterday's session. Once again we dropped it intraday. We had a nice reversal, close up around 27.5. There's some major support there. If that level drops, then I think we could come down and test the 200-day moving average. And this thing's real over, even with this correction. I mean, it's still, it's still extended in longer-term technical terms. So, just be careful of this one if it does drop that level. Next one we'll look at is Billiton, which had a really solid day yesterday, and I wasn't sure that we were going to trade so well in the mining space yesterday because the previous Chinese rate cut, the market, bounced them initially and then only faded them at the end. Once again, we get a little bit different scenario yesterday. They actually opened soft and then traded well, throughout the day. We're making a little bit of maybe a potential cup and handle here at 295. If we get above 295 on a closing basis, then I think this thing's got room to the upside, and it's also kind of consolidating right around the 200-day. The last one that we'll look at on the day today is Coronation. We'll look at a 2-year here just so you can see it a little bit better. So definitely dropping some support here in Coronation around 90 bucks. You could throw out that there's a level here at 88, which is right where we closed. But to me, this is looking ominous. We're definitely consolidating at what I think is below support, and potentially significantly lower levels actually out of this stock. And I think fundamentally the basis for this thing to trade lower is still there as well. That's it for today, guys. Good luck out there.